Alrighty, sorry guys, we are back. I had to jump over to my my hotspot because my internet went down. So you gotta love Bluestream, Bluestream Wireless. If you're out, or Bluestream Internet, I guess now it's called. If you're out there, you guys suck, man. Always, always, always. So all right, we are back. So we were talking about yen crosses, and I'll kind of just give you my thought process here with what I'm looking for Chef JPY, and whoever else, you know, I guess didn't see me come back online, they'll just watch the video. I'll just splice it back into the other one. So all is good. So what I'm going to be looking for is, again, on the common theme between all these yen crosses is continuation move, right? So what I'm going to be looking for is until we see some decent pullback, right? And ideally what I wanted to see was I wanted to see us come back up into like the 125 500 area. And coming into like last week, you could see what was I looking for. I wanted to see us come back into this reaccumulation here. Well, we're not getting that. What I will do though is if we do come in, and I'm really not fond of this price action up here that happened during New York. You know, I'm still kind of under the assumption that if we get a pullback, I'll take it. But if we don't get that pullback, right, what am I going to do? Just same thing, play the reaccumulation, right? We get something where price does something like that, and then we break. I'm a buyer from here, right? Whatever that shakeout is, that's what I'm going to be looking for. Alrighty. So I'm looking for those buys on Chef JPY, AJ, NJ. We'll talk about, actually we'll talk about EJ in a second, but we'll talk about GJ as well, right? GJ, the big play on GJ, right? We've been, and again, I've been looking for buys on GJ. It's not giving me what the optimal entry that I want. Right. What I do want to see is, okay, are we now, after this break, we know that this is the leg that is maintaining it, and we know that this is my slingshot, right? So if we get price to come down the 800 pips, I'm a buyer. I don't see that happening anytime soon, and I really don't see a reason for GJ to be giving us that kind of pullback at this, you know, where price is currently. So what I'm going to do, again, same thing, play the reaccumulation. You could just see how cleanly reaccumulation and so forth, just keep walking this up, taking those stairs up. And until price hits my stop loss on a continuation play, I'm going to keep playing that as long as it gives it to me. During New York session today, there was an opportunity for a buy, right? What's it sitting at right now? Something in the neighborhood of like a 1 to 12, right? It was a large stop loss, 11 pips, but it did give the opportunity, right? You could see price gave coming into, and we'll just go to replay mode here for a second, coming into like a lower time frame, like a 15-second, where you can really see what's going on with that price action. We can see the distribution, right? You have ample reason to think, okay, so what is price doing here, right? Well, price is ultimately giving us a trading range, right? We've got a trading range, and we can clearly see that this is where they instituted that sell position. And this is without a doubt where they turned around and bought the market back up. So this is what they need to mitigate out of. And by taking that fib from here to here, we can see that for me, my 2 points that I only care about are that 50 and the 80%. All right. Once price now breaks this high right here, this was the new high that I needed. The 80% was a viable option. Okay. And we can see, well, where did price come into? Well, price came right into that 80%. All right. Again, it was a large stop loss. It was 11 pips, but it is what it is, right? I mean, this for me, my maximum risk has to be that low. And from there, we can see that price just ends up tearing out of there, not showing any signs of weakness, and ultimately coming back, right? And this was something that I had no intention of doing, coming back. And when you measure this high to this low, you can see where 50% of that mark is. And this is where price ultimately comes back into and gives us another accumulation. Right at this point here, boom, comes into the 50%, gives an accumulation here. And if you don't have the seconds time frame, right, just start training your eye on what these schematics look like, right? This in here is actually a really good schematic with a mitigation. If you come down into, I'd say maybe like a 5-second, you'll really be able to see, okay, well, what do we have? We have, there we go. So what do we have? Well, we have a schematic, right? We have a trading range, right? Now, granted, these two are very weak, and this is why I didn't take this trade. Had this actually given us a push down, right, to where I can say that orders are being filled all day long, this is my spring, right? All day long is my spring. So if price, all right, if I take my fib, I guarantee you that we're going to get some kind of price action into an area where I'd like for price to be. So if we measure out our entire spring, which would be this candle right there. There we go. So if we measure out that entire candle, I mean, what are the chances that price is going to come into our 80%, right? And there she is, right? That's the entry. And you can even see, well, what's price doing on this 5 seconds? Another schematic, right? It's a type 2 schematic. There's no manipulation. There's no spring, but it's still there. And like I said, had this price action in here and had this price action in here been a little cleaner, I would have taken that trade on a Tuesday. You know, on a Thursday, maybe I give it a little more risk, but you're talking a 1.2 pip stop, right? 1.2 pip stop towards the end of New York session, because this is lunchtime. This is London close already. You know, we're sitting at 160.93. That's about a 20 pip move. You know, what potential, let's see. So actually that's a bigger than a, hold on. That's 120 pips. That's your 1 to 100 right there. From this morning's or this afternoon's New York session. So that's kind of, well, that's something I'll go back and journal this play as well, because that was something that should have been taken. And, you know, I'll make sure that I got to learn from that mistake. That goes back into my missed trading sections. But yeah, you could see, look at this price action. That's a 1 to 100 in about 7 hours, not to mention what we could have seen in here. So that was actually good that I went in there, because now I'll be able to journal that later, and that's going to go into my missed trades folder, because I was watching this. I just wasn't watching it at 12:30. Like, I kind of stopped watching a little later. But the point of interest was the key, right? Point of interest is we're in our 50% of our reaccumulation leg. So that was ultimately the confirmation that I wanted to see out of it. Yeah. Okay. So moving over, right? So we talked about the yen crosses. The one yen cross we haven't talked about yet was UJ, right? And UJ is going to go down, I think. Can we go over Bitcoin? Yeah. Just remind me towards the end. We'll do some crypto. Yeah, UJ is just UJ, man. It's so from where in the most recent future, right? Where I really started to want to buy UJ was right in here in this reaccumulation back in January of 2021. You know, I've shown plenty of price action in here that, I mean, you guys can see like my markings. Like I just was trying to catch the reaccumulation. This is the one that just hurt. Oh, I can't even go that low anymore. This is the one that hurts, is that accumulation that missed me by like half of a pip. But what we've seen on UJ is just a massive push to the upside. And remember, right, UJ is the inverse correlated pair to Japanese yen futures. So from where I was really trying to get into these buys, we've seen price appreciate almost 1,800 pips. And, you know, unfortunately, I've only been a party to a couple of these trades. And I'm not holding any UJ buys. But what I have been trying to get into is work positions up. You know, we got into some buys here, ended up coming back to break even. Started working some buy positions out of the reaccumulation moves, right? And we just haven't seen price give us any kind of entry coming back to the downside. This was the last potential entry right here that we saw price coming into the 50%. ended up going to reduce risk and ended up taking a break even on it because price comes right back. And then ultimately this is the start of just massive bullish leg. And you could see, like, I tried working an entry in here. I just wanted an accumulation, right? Because the stop loss on this was just massive. It was approximately like 20 pips. And on UJ, I just can't do that. So how do I journal? Oh man. There's a video on my YouTube channel. Just type in the search here, just type in trade journal. And yeah, you'll I don't remember how long that video was, probably like an hour long, but it goes through how my journal process works, what I do, how I look at it, and what do I do with that information. Yeah, so you can just see, I mean, UJ just hasn't given anything. Absolutely nothing. You know, what I was looking for was coming into, you know, these reaccumulations, I wanted to see some kind of schematic, and we haven't gotten that, right? Coming into last week, there was an opportunity to get in. It just never gave us the confirmation, never gave us the mitigation of it. And then you can see what we did, right? We essentially reaccumulated and just never got a pullback. You know, the stupid thing, here's my alert, and we just never got that pullback. So continuing up, I mean, UJ is just on a tear. So, you know, if we get a pullback, all right, now I'm a buyer on UJ. If we don't get a pullback, I have to wait for that reaccumulation. So yeah, just type in, you know, I want to say, man, I probably did that video. It's got to be like a year ago. It's still applicable. I mean, nothing has really changed in my journaling practices. If anything, I think it's getting a little more intricate just because I've got a little more time on my hands to do it. But so UJ, you know, same thing. UJ, we get a pullback, I'm a buyer. If we don't get a pullback, I'm a buyer if we can get some kind of reaccumulation, right? The theme, and this is something, again, I've implemented. The theme is, in a bullish market, play the reaccumulations until price tells you not to. Right. And how do you know price told you not to? Because you got taken out by stop loss hits, right? I wouldn't even say reduce risk, because a reduced risk, you're not invalidating your trade. You're just, you know, you're taking the loss on the reduced risk. The last yen cross that I was looking at is Euro JPY, right? And EJ, I've been pretty quiet with EJ for a while, just because it was like the redheaded stepchild, right? It was the only yen cross that was not bullish. And, you know, I didn't want to try to fight this thing. What we can see is this, right? From a market cycle perspective, all we did, right, was come right back into demand, right? This is a reaccumulation. We know that demand is present there. I haven't even marked it out, but I'm just curious where exactly we came to. I wonder if we did come to 50% of this stupid thing. Oh, on the money. Yep. Alrighty. So, I mean, one of the reasons why I like to always back test is I always want to find the reason that the market reacted from that point. It's no coincidence that she came right to 50% of the prior area of demand, right? And ultimately did what? Made a new high. So at this point, like, what's my thoughts on EJ? I mean, my thoughts on EJ is that this is going to be a confirmed reaccumulation very, very soon. I mean, what are we talking here? We are talking 35 pips before the reaccumulation happens. And what I'll be looking for is, once we trade above this high, right? You know, this is my shakeout, this price action. So it's going to be a matter of, what can I find? Is there something I can put a limit order on? I'll tell you right now, if there is an accumulation down in here, that's going to have a limit on it for me. So, I mean, we'll take a look at it. Let me just do this. Let us go replay mode. We'll go replay mode right down here. So this was March 9th. We can get down 1 minute. So March 9th, let's see what happened here. Wow. I had something marked out on here too. What did I have marked out here? Hold on for a second. Let's see. Did you wake up one day and boom, it clicked and now you're a pro? I wouldn't say it was like overnight. I will tell you that, you know, like many people, I definitely had my bumps and bruises. I definitely blew a bunch of accounts. I think if there was like a deciding factor or an important milestone in my trading, I think it was understanding risk management and trade management. I think that right there, once I wouldn't even say mastered it. Once I had a good foundation of it, that's what really started to catapult my profit and loss statement. Because I think all too often where traders really kind of fall into a downward spiral is they lose 2, 3, 4 trades, and now they feel that they've got to double their, they've got to over leverage themselves, instead of risking, 0.25%, now they're going to risk a full percent to try to make that money back. And for me, that's not how I trade. If I lose 10 trades, the 11th trade is still going to be the same risk because it's a numbers game, right? It's the law of probability for me. And what gives me the confidence to keep doing 0.25% when I'm down, 12, 14, 16 trades? Well, I mean, you've seen a couple of them today. You've seen that, Chef JPY is the gift that keeps on giving, right? There's so many potential plays that I can work myself into that, on an order flow, most of you guys that know me, on order flow plays, I risk on my prop firm accounts, I risk $125, and that's it on order flow plays. And what's that mean for me? Well, that means that I can lose 16 trades in one day before I even get to my cutoff for my 1% for the day. So what's that tell me? That tells me if I lose 14 trades, what am I doing on the 15th one? The same thing I did on the previous 14, right? I'm doing the same thing. I'm just going with that law of probability. And what gives me the confidence in that is my journaling. I look back at my journal, I can look at that history. I can look at what the statistics and the numbers show. And those numbers show that if I just do everything consistently the same way every time, it doesn't matter if I lose 5 in a row. The potential for me to get, one trade that eradicates 100 trades is so great that's what's important. So no Zoom today. No, Zoom was acting up, man. Zoom was acting up. So, are you able to upload the stream that lost the? Yeah. I'm just gonna merge them. I recorded it, so what I'll do is I'll just clip them together. So yeah, no worries, man. I'll have my daughter edit it out. So she's my editor. So anyway, EJ, right? EJ, this price action right here, I'll tell you right now, this is my focus right here. This Frankfurt into London that we swept, but I'm curious what the heck we came into. What did we come into? Because I've got something marked out here, and I don't know what it is, but price came right into it. So I'm sure I marked out probably. Yeah, I'm sure I marked out something in here. All right, no big deal. I'm not gonna dwell on it. It is what it is. But what I'll be looking for is I'll be definitely looking for an entry that I can take out of this price action right here, because it did sweep, right? The key for me is it swept Asian liquidity, right? You could see you've got your Asian lows right here. Price did trade below it. And this was March 7th. So why can't I go to a 15-second time frame on March 7th? Well, that sucks. That really does suck. All right. Well, I mean, you really don't even need the lower time frame for that. Realistically, all you got to do is just measure out this entire move. And does it make sense to put a limit order is the question, right? So 80%, let's see, 80% is going to be in the neighborhood of 20 pips, right? So it's just a matter of, do you want to risk these 20 pips right here? For me, probably not. Like what I'd probably end up doing is just going and seeing if I can get lower time frame. I know you can get on the 1. I'm curious to know if maybe I already did this on the lower time frame. But yeah, this is where I would, right here. This is where I would play. So I can see already that this was a seconds time frame accumulation in this price action, and then this is my spring. So I'm playing out of that. And you can see we've got some imbalance here, which falls right in that 50% of that spring. So that's where I'm a player from. You know, come over here on the 1 minute on your chart, and this is where I'm going to be personally throwing a limit order. It's going to be an imbalance fill. So I mean, we've got everything that I'm looking for in this. You know, you don't really need to see the seconds. I mean, it's helpful, but I really don't need to see too much. You know, we've got the imbalance there, and just taking it off the 50% puts our stop loss at 4.6. And right, what's my target? Where am I going to take this sucker to? Well, a new high, right? I'm taking it to a new high, so it's at 133.67. So I mean, just think about where 133.67 is right now. That's where I'm taking it to. That's a 1 to 196. You know, so yeah, I'm give me a sec, because I'm throwing my there you go. So I'll have that marked out. I'm going to throw a limit on it. And which session indicator is that? Which one? So I use two. Sessions on the chart is the main one. And then I just have one that I created. I just can't share it because TradingView doesn't let me share the damn thing. But all you got to do is just go to sessions on the chart. Some of the key things real quick, just activate high and low, so you don't have, like Yuri does, his whole chart's a colorful Picasso, but I can't deal with that. But I do activate high and low, which just gives me the bodies of the candles, and then you can just change whatever you want, right? So if you want to make London session 2 a.m. to 3 a.m. like I do for Frankfurt, you know that right after Frankfurt, that 1 hour, the rest is London. So, and then you can just come in here and go to style and change your colors. So you can change like the opacity and stuff like that. But sessions on chart, that's the one I use. All right. So anyway, EJ, I mean, we're a bazillion years away from that entry. So that's not going to be a high priority. What is a high priority though, for me, is just looking where we're at right now, you know, from New York session today. This is where I'm a buyer from. And you can kind of see, well, what did price do? Just like GJ. I mean, you can see we had reaccumulation right here. And so if we just measure out our shakeout, right, there's our shakeout. Price comes just shy of the 80%, which would have definitely have maybe cost me a monitor. Because that would have been a 1.7 pip miss. And, you know, now what do? Okay, so we price in a new high by breaking that. So where I'm going to be looking for is price to come back into this right here, right? This is what I want to see. This kind of price action right here is what I want to see us come back into. So price trades in here, right, during London session, Frankfurt, something like that, London crossover, even New York, and we get that schematic, right? Boom, I'm a buyer. So on NASDAQ, yeah, I mean, I'll tell you right now, indices, I'm playing ping pong with them. So I'm buying and selling them. We'll go through them. I mean, I've definitely got some plays on them that I've taken and what I'm kind of looking for. But yeah, EJ definitely looking for the buys. And just keep in mind with this, right? There's a very fine correlation with Japanese yen and indices. And now they're not 100% correlated because there's two different types of fundamentals that drive indices, right? You'll hear terms like risk on and risk off sentiment. So in a risk on sentiment, that means that investors are willing to put risk on their portfolios. So what that means is you're going to see money flooding into indices like the S&P 500, NASDAQ, Dow Jones, even the Russell, right? You're going to see money going into these indices. For those of you guys that don't know, that have never had like a 401k, I would say like 90% of all 401ks are invested in the S&P 500. So like if you think about it, the US job market is heavily invested in the S&P 500. That's why you're not going to see a tremendous depreciation of what the S&P 500's given you. So that's why we've been in the S&P 500 in a bullish market since the beginning of time, right? I mean, that thing, if you really look at it, it's never at any point in its history ever been bearish. It's always been bullish, and it's because it gives those guaranteed returns. It's just more investors coming in, and it's a way for, if you think about it, it's almost like a safe haven among safe havens. So where I was going with it is, as the yen really starts to depreciate, what that should be telling you is that money is coming out of safe havens and going back into risk on positions. So if you're taking money out of the yen, right, because the yen is a safe haven, you're seeing now what's going on with like the US dollar and what's going on with gold is strictly on a totally separate fundamental level. I mean, there's so much manipulation going on right now in the metals market. And if someone could please explain to me why the US dollar is so bullish, I would love to chat about that, because fundamentally there's no reason for that. I mean, we are in the pitfalls of inflation. Our economy is, in a downward spiral, and I'd love to talk more, but then this video would get banned because YouTube does that now. There's so many implications into that. So Euro USD going long tomorrow. It might be. I'm looking for a hedge buy on GU, but just keep in mind, we're in a bearish market still on EU, so that's EJ. We'll let's dive into the dollar crosses, right? Real quick. We'll cover Euro GBP because this is the easiest one. This is for all of you, for all of you buyers of Euro GBP over the many months that I've just been here. Hold on. Where is it at? Over the many months that I've just been saying this thing is bearish, bearish, bearish. Actually, son of a gun. Look at that. That's what I did. I don't remember when I did this, but that's what I thought we were going to do. And minus actually, there it is right there. Minus that distro where I thought it was going to happen. It's there's, come on, where is she at? There can only be so many buyer's traps on EG, and USD pump and dump. I don't think it's going to be a pump and dump. If it was going to be, if they were going to dump it, they should have done it already. So, swing structures. Yeah. Just take your leg, right? It's the leg structure. So yeah, we'll talk about it here. Right. So like on EG, right? What's maintaining structure on EG? And when we look at how this thing is just walking itself down, right? We are now the smallest form of structure, right? Our lowest time frame is going to be, hold on, bear with me, is going to be this right here, right? This is our leg structure. So my swing position is going to be out of the lowest form, which is our lower time frame, which is going to be out of here, right? And ultimately we are in this massive leg coming down like that. So yeah, we'll get to Bitcoin. So, oh, absolutely. Yeah. That's where my personal opinion is we're going to come up to that $100 mark. And then that's going to be the I guess the wait and see for the US dollar. Yeah. Then Bitcoin will be the new gold standard. I don't know if Bitcoin will be the new gold standard though. So that's the only, like when you really think about what is the basis behind the gold standard? And if you think about it, the reason and why the U.S. economy came off of the gold standard in FDR's time, I have no idea. But the reason behind the gold standard is that price of, or that weight of gold is never going to change, right? It's physical. So if I own 5 pounds of gold, that 5 pounds will change in price, but it's always still going to be 5 pounds, right? So if I'm going to, if I'm going to take a bunch of gold, I'm going to put it in my safe and I'm going to hold on to it, now I have a, essentially I have a sure or a definite appreciation for money, whichever way it goes, up or down, but I still have it. And the problem with Bitcoin is that's not the fact, right? Bitcoin isn't a tangible object. It's not something I can put in my safe, right? Just as easily as we can transfer and make transactions on the blockchain, I mean, just as easily as it can be manipulated and gone away, right? A hacker can come and take my Bitcoin, right? As much as precautions as I want to take, it's inevitably susceptible to something like that, where the only way you're going to come and take my gold is you're going to have to dig the earth around my house. You're going to have to pick up my 1,000-pound safe. Then you're going to have to try to determine how to get into that, into that vault of it. So, yeah, but on EG, I'll tell you right now, EG is pretty simple, right? I mean, we came into the 80%. I thought I had this marked out already. I don't know if you guys have been dealing with TradingView, deleting some of your entries and some of your positions, but yeah, all you got to do is just measure out this move right here, and you'll see that we came into our 80%, and there's just a super clean distribution that has happened here. Man, where is my markings? There it is. So you could see that we just have a very, very clean distribution. There's also just a lower time frame schematic that's in here, and that's ultimately where I'm going to have my limit order set. Just keep in mind, where's 50%? 50% is coming in right here. So the first area that I'm going to be waiting for my sell is going to be out of this distribution, right? Or the redistribution, I should say, of price. If price comes in and gives me a schematic there, I'm pulling the trigger. And if not, I'll wait for a schematic up here, but I will have a limit order out of this price action. Okay. But EG is extremely, extremely easy to see what's going on with it. And remember, I mean, I've been talking about it probably since like August of 2020. That's when EG was my very first higher time frame schematic that I marked out. But where are we heading? And, I've been saying that I want to target like the 79, 78 range, and, we're 500 pips from that. But in reality, I mean, we can even come and make a new low, right? We can come and make a new low. And I kick myself for closing out of the trades that I was in up here, because, I thought, oh, well, we'll come back up, and I still have a limit order pending here that I just don't think is going to happen. So that's EG. All right. Dollar, right? Euro USD. This is again something that, we're in a bearish market. I'm just waiting, and I've been waiting for, I feel like, weeks now for price to come up and get into my sell area. And this is what I'm waiting for. I'm just waiting for the sells up in here, right? This is the leg. So when we look at leg structure, this is the leg that broke this low, right? So where am I a seller from? I'm a seller from the cause of that break, which is this redistribution right here. If I get a schematic here, I'm taking it. And then the manipulation that happens here through that FOMC price action, I'll be taking an entry out of there, right? So those are the 2 points. These are the 2 points that I'm going to be looking for the sells. On the buy side, yeah, I mean, there's probably a potential for a buy. You could see, like, I had my alert in here, because if we did come back into this price action, right, you could see that we've broken order flow, right? So this was maintaining order flow, and then this reaccumulation ultimately was my slingshot for it. So, what I was looking for is, do we have a reason for price to accumulate in that area and take a buy out of it? And there was, I mean, you could see as soon as we catch up to this here, hold on. There we go. So you could see I was kind of in the neighborhood of this manipulation during London session. I had my alert here. So if we get an accumulation here, I will hedge the buy. I mean, I'm holding all kinds of sells on Euro USD. The last, or the longest hold I'm holding on Euro USD is from September. So I don't mind taking some buys as long as it gives me the proper price action to get to the sell area. So after a schematic is present, when we put limit on springs and U-test, sometimes it comes to our limit and sometimes it doesn't come. So if it doesn't come to our limit, when we have to take our entry. So yeah, I mean, you've got to look at it from 2 sides of it, right? What invalidates the schematic. So like if we just do this, right? Say this is my leg, right? Bullish leg. And now price comes back. All right. And say that I had an entry, you know, right here. Okay. Well, let's say price comes within 2 pips of that and we get an accumulation and then she goes. Yeah. That for me, that I'm deleting that order. That order has been mitigated. It missed me by 2 pips. It is what it is. Another option would be, you know, price, this is our leg. Price comes back into my slingshot and I had the entry down here off of the extreme and then we made a new high. All right, then that's it. I'm done with it. You know, those are the 2 things that would invalidate those setups. Now, just keep in mind that let's say that, you know, this is our leg, right? Price comes down here and does an accumulation, right? And you know what? Hold on. Let me do it like this. Price comes in and does an accumulation, right? At this point, when we break and let's say price reaccumulates, but never comes back to test this, well, this entry is done until we do this, right? Because when we do this, now this is my extreme and that limit is back on. So hopefully that makes sense. Yeah. Do you have any advice for TP often? I will be up at least a 3-to-1 and we'll let price come back on me for a loss. Yeah, if you're worried about a 3-to-1 hitting your break even, then you're not going to like my answer, because I don't even get, for me to get into a trade, it's got to be a minimum of a 1 to 10 potential. And it's not so much the risk to reward. It's more or less the price action, right? So, you know, if we look at, let's just say, let's see here. Hold on. All right. Okay. So if I'm going to be getting into, let's go like a 30-minute time frame. All right. So let's just do it like this, right? All right. So price is here. Price has just made this new low. All right. Price just made this new low. And what am I waiting for? I'm waiting for price to come up into my points of interest for me to sell this. So let's just say that we get a distribution here, right? Where's my target? My target's a new low, right? That's my target. So how do I manage my trade? Well, depending on, you know, what happens, right? If we get price action that, one second here. Okay. If we get, yeah, cool. If we get some kind of price action, right? That, let's just say that this is like I don't know, a 15-minute, a 5-minute chart, whatever. You know, I have my targets way down low, and let's just say that this is the leg that breaks up here and gives me the distribution. Well, my first take profits are going to be breaking this leg. You know, my first area that I'm going to break order flow, that's my targets, right? So that's where I'm going to pay myself the risk on this trade. You know, so if I risked $500 on the trade, when I break order flow, that first break of order flow, which is typically, you know, and I would say on average, it's probably in the neighborhood of like a 1 to 6, 1 to 8, maybe a 1 to 9, 1 to 10. That's where I'm going to pay myself the risk. And then on the break of the actual leg structure, whether it's, you know, in whatever entry I'm taking. So if I'm taking the entry off the 15-second time frame, it's going to be that leg structure. You know, that 15-second time frame could be the same leg structure that you're going to see on a 5-minute time frame. It's within that leg structure. So do you need to have seconds time frame to find 1 to 10 entries? I mean, I don't know. I'll ask those of you guys that are watching that definitely trade, you know, like I do. I mean, I know a lot of you guys that don't have the seconds time frame, right? I mean, would you say that? I mean, I definitely would say the seconds time frame definitely gives you an advantage, but you don't need the seconds time frame. I mean, I could tell you that there's quite a few traders that I know that, you know, obviously they've been able to train their eye, but you know, you look on a 1-minute time frame, you know exactly what's happened on the seconds time frame. You don't even need the 1 minute. Sometimes you could see it on the 5-minute, right? Yeah. Yeah, there you go. There you go. Well, so if you never make a new high or a new low, so you know, you end up staying in that trade. I guess this is why, like for me, I'm looking for that directional bias, right? I'm looking for that play that that gives me that move. I'm not trying, an example would be this. As much as I would love to catch these plays in here, I really don't care too much about them until it becomes the structure point, right? I'll play order flow, for a period of time. But what I'm looking for is I'm looking for the big play. I'm looking for the move that I'm going to be able to position myself in and go from there. Yeah. There, and Sean said it right. Focus on hitting the target, not so much the, like the R to R. I can't tell you how many times I don't even notice what the R to R is until I actually go to put my position to partial out, or to maybe update my first take profit or something like that. But yeah, it's not, like I said, it's more of an advantage just to get certain price action and refine your entry, but you definitely don't need the seconds time frame. And if I remember correctly, I only started trading off the seconds time frame maybe like March of last year, March of 2021. And I had been trading the same way I've been trading for going on like 3.5 years now. So, I mean, I did just fine without the seconds time frame. So yeah. How much do I take in partials? So the first time I take partials, it's always going to be what I risked on the trade. And depending, I mean, there's a ton of scenarios. Typically what I'll do is I'll pay myself the risk on the trade, and then I'll take off, the way I trade, my MT5 splits my orders into 25%. So I'll just close out 25% after that. So 25% volume, 25% volume, and so forth. Depending on the play, if I'm just playing strict order flow, I may just close out 50% volume at the new high or new low. So, but yeah, so on EU, right? I definitely potentially will look for a hedge buy. But there's really nothing EU for me. There's nothing clean that I want to play out of. I mean, you could see the market cycle playing out. You could see that we did come into an area of demand. But I just need now an accumulation down here, right? For me to do anything. And keep in mind this, you're still bearish from here, right? After this. So, for this to be essentially something that I would like to do, I'd prefer this to happen and then us come down so that I can get something like that. So how long do I usually leave trades for? What do you mean, like the limit orders, or how long am I in a trade for? Yeah, I'll wait for you to throw your I guess answer to that question, and then I'll answer. No worries. So going over to GU, right? Let's take a look at GU here. So on GU, I mean, same thing. Like, what am I looking for? I'm looking for the hedge buy, right? Ideally, where do I want to sell this sucker from? I want to sell it from up here. I mean, I can't tell you how long I've been waiting for us to get back up into this area. And this is ultimately what's maintaining, you could see what's maintaining our lower time frame. It is this, right? This is maintaining my lower time frame right here because of that low. So this is our leg. And if we come up into this area, that's where I'm going to be a seller from. If we come up to here, I'm going to have a limit order set off of that because there's a lower time frame structure. Like in a trade position, like I don't have like a set rule for my trade positions. It's however long it takes for price to get up to my next intended target. In a bullish market, right? I mean, I'm going to always try to hedge positions, but I could be in a trade as little as a couple of seconds, and I've been in trades that probably are creeping on the neighborhood of like 8-9 months right now that I've been in a trade. So yeah, I mean, Chef JPY and EU are the longest trades I have right now on my trading platforms. So, and I got into those trades in September. So yeah, I mean, it's creeping up there. And I really, yeah, I don't have like a, I got to close out of this trade. No, listen, if the market's bullish and we've been moving 1,400 pips in a bullish direction, why am I going to close out of the trade? Right? It's not until the market starts to show signs of weakness, then am I going to take that trade off? So yeah. So on GU, right? I mean, I know where I'm selling from, and now like, what do I want to do for the buy? Cause I'm holding a bunch of sells on GU. We saw the accumulation last week, right? I was looking for buys out of here. We just never got it. I was looking for buys out of this reaccumulation. We never got it. And if you look this morning, I wasn't up for it, but this morning you actually had a really nice entry out of this accumulation that happened to cause the next reaccumulation in price. And it's pretty simple. Like, you just come in here and this is a great example. All right. So you don't have the seconds time frame. Okay. No worries. Right. All you got to do is just pay attention, and you could see on a 1 minute time frame that you have a type 1 schematic, and then that this is your spring. And then once price breaks, right? So you have 1, 2, 3 drives, right? And then ultimately you have that spring. Price breaks the high and then comes right into 50% of that move. So, this gave an opportunity today. I don't know what where's GU at right now? I don't know what GU, let's see. GU's at 3270. So this gave an opportunity and why I wasn't in this is because this happened at 3:14 in the morning, my time. So, you can come up here and you can see, all right, so that was about a 2.5 pip stop loss, and price is at 3270. So about 150 pips, right? So that's a 1 to 59 in about, what are we talking, like 17 hours? So yeah, I'll go over crypto, man. Don't worry about it. Yep. At what point do swap fees not become worth it though? So that is something that you have to look at. I'll tell you right now, like my EU trade, I'm actually positive swap. The most brokers are paying positive swap on sells. So, I mean, it's not much. I mean, I think I'm positive like $136 right now on EU sells. But that's something you have to take into account. Granted, I don't have a, like, I don't keep a spreadsheet, and I don't keep track of the ratio between the swap fees because it changes, right? But what I will do is when I start to see that swap fee is starting to eat into my profits, that's when I either am going to take some position off, and that way it alleviates some of that swap burden, or I'm just going to close out the entire trade, and that's what it comes down to, So yeah, that is a good question, and that's something that you have to look at. And just to, your last part of the question where, yeah, when price starts to just go sideways, that's why I don't like. Have you ever, when was the last time you saw me pull up a Euro Swiss franc chart or a GBP CAD chart or a Euro CAD chart? Because those markets have been sideways for so long that, when it comes to margin requirement and then just swap fees, right? Holdover prices and stuff like that, it's just not worth it for me. So, but yeah, that's a good question. Okay. So anyway, GU, Yeah, very, very simple, right? Very simple. This was a nice little play. My colors are a little off, right? Because you guys over there in Europe haven't gone through daylight savings. So this right here is actually the Frankfurt Open right here at 3 o'clock in the morning, my time. So that's the Frankfurt Open. That was that right there is the most important candle. It's that open there that sweeps that low, and then we break and then come right back in. So this did give a really nice little opportunity. And what I'll be looking for, for tonight going into New York, pretty much is this. We know we've established that we have broken order flow right out of this leg. We know that this is the slingshot that causes that. We know that this is the accumulation that causes that. And, ultimately we've confirmed a new high here, right? So we have this price action that sits here. This is ultimately what is maintaining that leg, right? So an entry back into this area or here, I'm a buyer, right? Give me a schematic, I'm a buyer. And if we don't, this is a counter trend move. So it's not like I really want to play continuation reaccumulations up there. I'd rather have price give me a pullback. What move are you measuring the 50 and 80 off? Is it the mitigation? No, it's the, well, I mean, it depends. It starts out as the manipulation is what I'm measuring. And then the mitigation of that manipulation is then what I'm going to measure. So I'm either going to measure the entire move or I'm going to measure just depending on the situation, it's either going to be the entire move or it's going to be, maybe my shakeout or my UTAT or my spring. So, yeah. Okay, so that is, that's GU. I mean, it's pretty simple. And the only other dollar cross that I'm really going to be focused on is US dollar Swiss franc, right? And what pretty much what I was waiting on, it's, again, this is one of those pairs that have just been bullish for days. I'm personally still holding a crap ton of buys from down here, and here. Right. And you can just see the most recent leg that I was waiting for is I was waiting for price to walk itself back into this reaccumulation right here. This is what I was waiting for. Well, we didn't get it. So I had to kind of just adapt to it. Right. I had to come in and say, okay, so what do we have? We have a break of order flow. This is a redistribution that we have now taken out a little bit of supply. We have an accumulation. So I now want to see if price can come into my 50 or my 80 range. And we did, right? We got that. So this morning you go down to the 1 minute and I was stalking the crap out of this trade today and it just kept missing me. So, you can see we have an accumulation, right? We have one drive, 2 drive, 3 drive, and our spring, right? We have our spring. So when we break this high, now I can take an entry. I should have taken it off the 50. I don't know why I didn't. I had one off the 80 and that was it. And then you can see what happened, right? Price reaccumulates. So after that reaccumulation, what I wanted to see was this is what I wanted to play out of this, which is also this right here. So there's confluence in between that. And this is where I was looking, right? Price comes in here and I'm a buyer to take this higher. Well, unfortunately, this stupid thing, you could see never goes off. My alert never triggers, right? We do come into the 50% and we tap it in right here about half an hour, 45 minutes past changeover. And now this thing has just skyrocketed, right? So what I'm going to be looking for is, is this play still on the table right here? It is, right? What do I need to happen? There's one of two things that's going to get me into this trade, right? The first is, I went over EG, man. Yeah. I'm looking for the sells out of the distro. So what I'm looking for is this right here, right? If we break this high, now this becomes my structure point, right? This becomes that leg that I want to see price come back down and go higher. Outside of that, now this reaccumulation that sits right here is what's maintaining my order flow. So, if we get some kind of price action like that, what I'm going to do is I'm a buyer from this area here to take this higher. I'm going to play the reaccumulation. Can you explain why the third drive on USD Swiss franc is not the, talking about here? Hold on. So, I mean, the answer is in your question, because for me, a spring can't be the third drive. A schematic always requires 3 drives and then the manipulation for it to be the spring or the UTAD, right? So for me, like looking at this, we have, let's just see this. Hold on. So for me, this is your change of character, right? Drive 1. So that's my climax to my AR. So this immediately, that your change of character establishes your trading range. And then we have a secondary test here, gives us our push. We have a secondary test here, right? Gives us our push. So yeah, we only have 1, 2, 3 drives. Now, had you had a drive in between that and you got this price action, then yeah, I would say that that's sufficient for a spring. That would be sufficient for the buy. And I would have a limit order somewhere in there, you know, potentially probably out of that reaccumulation. Because it caused a break. Yeah, but it doesn't matter what it caused. It's still only the third drive, right? I mean, what if your second drive, you know, I mean, how many times, let me ask you this, how many times have you seen, and I'll draw this out. Hold on, let me do this. How many times have you seen price do this, right? You have a, how many times have you seen something like that? Or you'll see something like that, right? You can get that all day long. It really doesn't matter if, you know, these exits of the trading range are just upthrust actions, right? It's just showing buyers' intent of taking the market higher. But for me to validate a spring, it needs to be the third drive, right? The third, you need to see, you've got to get that, you got to get that climax. You've got to get a test. You've got to get a test. And then whatever that manipulation is that sweeps that low, that becomes my spring. But you need to have a secondary test in phase B, because if you don't have a secondary test in phase B, then it's just still phase B. All right. Hopefully that makes sense. But yeah, for me, it's always got to be 3 drives. Too many. Yeah, exactly. You know, so yeah, and just remember this, like, you don't feel like, this is something that I had to really overcome. Don't feel like you got to be the first one at the party. Don't feel like you have to be the first one in this century, because, you know, like right here, I can't tell you how many times, there we go. I can't tell you how many times this will happen right here, where I'm waiting. I've got an alert here for a spring, right? I'm waiting for the spring to happen, but price comes here and then does this. All right, so I missed the trade. How do I get in, right? What do I do next? Well, it's simple. I wait for that. And when we get this break, now I've got a limit order right here to take this higher, right? If I miss the accumulation, follow your market cycle. You know that you just had an accumulation, play the reaccumulation, right? Because if that reaccumulation fails, you know the accumulation is going to fail. Right? Price is going to turn into a redistribution. And if that happens, whatever, you know, you took the small loss. That's why risk management is so important. You know, for me, if I lose that 0.25%, who cares? You know, I mean, think about it. No matter what size account you have, you can have $100 account. You can have $1,000 account. You can have $100,000 account. You can have $1 million account. 0.25%, you don't even notice that. You have $100 in your account, 25 cents goes missing. You don't notice that. You know, $100,000 account, 120, you know, you've got that 0.25%, $250. You're not going to see that on $1 million account, $2,500. You're not going to see that. So for me, that's why I chose, when I started doing this, you know, and decreasing my risk on a trade. And I'll tell you right now, when your account gets pretty large, that 2% starts messing with you psychologically. You know, you take 2 losses in a row, you're starting to, you know, I know exactly what some of you guys do when you over leverage and you're like, man, I gotta get that money back. That's why I decreased it to 0.25%. Can I check Euro USD? Yeah, we literally just did Euro USD. So on what time frame do you mostly look for confirmations? So the number doesn't matter for me. There is no like time frame, right? It's look at the price action. You know, let's just say this, right? Let me play this out for a second here. I don't know if TradingView is acting up. There we go. All right. So let's just look at it like this. All right. Slow down there, bud. Hold on. There we go. All right. So whether or not I'm on a 5-minute, right? On a 5-minute time frame, this is still the break I needed. Whether it was the 1 minute, that's still the break I needed, right? Whether I go to the 15-minute, that's still the break I needed, right? No matter, it doesn't matter the number time frame, right? It matters what's happening on that price action, that leg structure. All right. You made some good money on US 30 buys. Yeah, I'm going to get to it. I know DR said he got into one. I'll show you what I was kind of playing off of. I was chasing it and I never was able to catch it. Yeah, I mean, I'm still looking for the bearish move, but I'll be buying it. But you can make money from a 0.25%. Why can't you make money from a 0.25%? If you can make money from a 1%, why can't you make money from a 0.25%? So EU, I'm looking short term. I'm looking for a hedge buy up to my sell area. Yeah, on a 0.25%. Think about it. You catch a 1 to 10 on a 0.25%, you just made 2.5%. Right? So if I risk $250 on a 100K account, 100K FTMO account, you risk $250, you catch a 1 to 10, you just made $2,500. Why, you know, for me, that's still making decent money. So anyway, on UChef, yeah, I'm looking for buys, right? I'm looking for buys. We'll get into some, we'll do indices real quick and then we'll jump into crypto. All right. TradingView looks like it's acting up here. I could see the wheels are turning on it. All right, cool. All right, so let's jump over to indices. So I haven't been able to, I didn't get into a trade today on them, but I'm holding positions from, where am I holding positions from? As soon as my charts load. Yeah. Give me a sec. TradingView is kind of acting up. I hope it doesn't go to 28K. If it goes to 28K, I hope you're not holding Bitcoin. Yeah, let's see. TradingView is kind of acting up, so give me a second. Let's see this. Wow, this is getting horrible. I think it's TradingView. Is the stream lagging? All right, well then you're in a good position. I hope you don't have any other crypto though, because if BTC drops below that 30,000 mark, I think we're going to see a tremendous amount of selling pressure across all crypto. And ultimately, I think it's going to be detrimental to, you know, the advancement of some of these projects. Yeah. No, I think it's TradingView. I think TradingView, it's Yeah, because I keep saying like everything else pretty good. Bear with me. I'm on my my hotspot because my internet went down. So, do you think it's going to hit 29K? I hope it doesn't. I hope it doesn't go below 30. All right. So let's see. Let's get over here to. Yeah, as soon as Trading View catches up. What prop firm would you recommend? So, I mean, I don't recommend because I haven't used them, but I use TPT, right? I use the prop trading firm out of Australia. I just haven't used anybody else. I mean, they came across when they came out. I liked what they kind of offered, and I just jumped with them. You thought BTC? Oh, yeah, I mean, I'm pretty sure. We'll cover it as soon as TradingView kind of cooperates here. Hold on. As soon as TradingView kind of cooperates. So it's not even showing up here. Geez, wow. Yeah, but what does liquidity on BTC have anything to do with it? Like, what are the equal lows representing to you? Yeah, it's TradingView. This thing is still. Have you ever accidentally? No, but I can tell you that if you do, for violating the terms of agreement. Yeah. They represent sell stops for you. Okay, but what does that, I guess the question is, what does that matter to the Bitcoin market? Over to my internet because it came back up. Yeah, so like in regards to BT, yeah, we'll talk about BTC in a sec. Hold on, let's get through this real quick. So yeah, I mean, I'm holding buys, right? I'm holding buys. I'm looking for sells. I'm looking for sells up here during London. So we're almost there, but I wanted to see where like DR got into the buy. What is order flow for me? Order flow is just order flow. Order flow is not structure. Yeah, order flow is order flow. So is this where he got in? I don't know if this is where he got in. No, this wouldn't be where he got in because we never broke that high. Dude, I don't know where he got in. Hold on. He said he got in. Oh, wait, unless he got in here. Hold on. Let me see if I can find it. So Yeah, I was waiting. This is where I was waiting for US 30 to come back in here. So that they can induce sellers and then stop them out. Yeah, but you know what? I think the misconception. Are you trying to use smart money concepts with BTC? Is that what you're looking at? Yeah, for the life of me, I have no idea where. I don't know if DR is on here, dude. I have no idea where he got in. Because I was waiting. I was going to get in out of here, but we never took that high yet. You know, like breakout traders. Sure. Yeah. Break and retest. I gotcha. Yeah. Totally understand. I just don't think, I personally think that if it drops below that area of accumulation, that all those buyers are gone. We'll go over it. Hold on. We'll go over it. Yeah, I mean, this is where I was looking for my entry on US 30 was right out of here, out of this accumulation or this reaccumulation, but we just never got it. So yeah. Oh, you guys can't hear me? You use ICT? Yeah, I know, but the problem with using that, right? Because that's a smart money concept way, right? There's no institutional traders that trade crypto, right? Institutions can't trade crypto. So that's why they have, the EFTs and stuff like that, or I'm sorry, the ETFs for crypto. So institutions can trade it. So your market movers aren't inducing that kind of movement, but, yeah, I'll tell you this, for like US 30, I'm a seller. There's two things I'm going to be looking at. I'm a seller from up here, right? I'm a seller from up here. I'm a buyer because of this right here. Or if we come back into here, I'm a buyer to take it up. So it depends on what we do first, It really depends on what we do first. And across all the indices, I mean, they're pretty much the same, right? When we look, Ray, is the sound working now? When we look at what SPX is doing, it's pretty clear to see. Like in SPX, I really wasn't looking at it today, but we come back into this price action right here, into this shakeout here or something here. I'll be looking to take this higher until we can get into a sell area. You have a 65% win rate? Oh, that's pretty good, man. Awesome. Yeah. Yeah. No, institute. Yeah. So think about it. Like there is no crypto. That's why they have the ETFs, because there's no crypto trading on, in the stock market, right? There's no Bank of America isn't going to log in and create a Coinbase account and trade $1 billion worth of crypto. So yeah, that's why for me, like trading Wyckoff and stuff like that, it's not as like, I'm not getting these extremely tight entries. You have to be a little more reasonable, because what market movers are using, like these big whales, what they're using algorithms, but they're not using algorithms anywhere close to what institutions have. So yeah. Oh, that's awesome, man. That's awesome. Yeah. 65% is freaking phenomenal. So, all right, cool, man. Cool. Absolutely. Yeah. So yeah, if you are on a funded account, not a challenge or a verification, if you are on a funded account, your first 3 months you cannot exceed the 5 lots. If you do, yep, you essentially you just lost your account. And yeah, because I have a buddy that did that by accident. So it stops out of nowhere sometimes. Yeah, I think it's just, I don't know if it's YouTube or I don't know if it's my internet. So, but yeah, it's, you can't, after your 3 months, you can just request a review of your account, and all they're going to do is just make sure that you're employing proper risk management. Like for me, I don't have the 5 lot limit restriction. I can utilize whatever risk I want to use on it. So, but yeah, I'm looking for, and really, how I've kind of been playing indices lately is I just look to see what we're doing going into New York market. So like this morning when we were here, you know, it was pretty easy to see that it was going to be buys because we're starting to show signs of reaccumulation. As soon as we pop that high, you know, I'm taking a buy out of here. So we come back down into New York price action. Yeah, I'm a buyer. You know, focus on what happens. I mean, this is, and again, back tested just to see if it fits your criteria. But focus on that 9:30 open to like 11:30. That's ultimately what I do. You know, this was the entry that really gave NASDAQ the spark, and then this was the mitigation that comes just shy of the 50% of it. So, which was a shame. But yeah, we come back into the open right in here. We come back in here. I'm looking for the buy right here. So. All right, it's cool, man. Cool. Yeah. Yeah. So indices, short term, I'm going to be looking for the buy, right? I'll be looking for the buy until we really start to see signs of weakness. And I don't think we're going to see that until probably Wednesday when we get into our speeches. So. All right, cool, man. Yeah. Yeah. You ain't got to sell me on it, bro. I hear you. Yeah. So where I think we're heading to, right at this point, just look at where NASDAQ is, right? I mean, this is the leg right here. So, you know, ideally we're coming probably somewhere in here. And you know, if we trade above here, then my line in the sand is going to be up here, you know? So we'll see. I'm playing ping pong with it. I have no problem playing the buys and the sells on it. So, am I bullish on Bitcoin? Yeah, absolutely. I'm bullish on Bitcoin. 100%. Yep. Yeah, absolutely. Now I'm personally not investing in Bitcoin anymore because it's financially, it's not worth it anymore. Like when we look at, come on, crypto. There we go. Yeah, when we look at crypto, let's go to BTC first. So, I mean, I'll tell you right now, this is looking pretty bullish. We're looking pretty bullish on this. So what I was talking about though is if we trade below this accumulation right here, if we trade below this accumulation right here, you've just essentially taken out all of the buying strength, all of these big whales that came in here that made this high, they're no longer there. So if that's the case, and you take out those buyers, you're pretty much wiping away, I don't even know how many years of, hold on, let's think about this as soon as it opens up. Yeah, I mean, just think of it like this, right? When price came up into this area here, it took 1,000 days, right? So you're talking, you know, relatively 3 years for price to break that high. I'll tell you right now, I think if Bitcoin drops, if you see Bitcoin, because Bitcoin is think of Bitcoin as the godfather, you're going to see projects that are no longer going to be able to operate. You know, it's great that, you know, you want to get Solana. Think of it like this. How do those who are running Solana make a living, right? They make a living, you know, all of your devs, all of your, you know, promotionists, all of your, you know, everybody that works on those projects gets paid from that coin's profit. And if that coin now takes a dive, and let's say Solana gets to $22, sure, you're going to have a bunch of people that want to buy Solana at $22. But if the project itself can't profit, can't progress itself, it's just going to be, you're going to be holding a coin that no longer has a project, right? Because I've been there. I mean, I've got a couple of coins that I own lots of coins of that the project no longer exists because it took such a dive. And I think that's going to be the detrimental part to crypto if in fact I'm not saying that if we break below the 30,000 mark that that's going to happen, but I could tell you that all the buyers that came in here, if they get taken out, right? If they get taken out, the buyers, that's it. I mean, you're going to have tremendous selling pressure, and you may come back all the way down to here. And at that point, you're looking 3 to 5 years before we really get crypto. Think about what crypto was doing here, right? Think about all these altcoins. They were non-existent, right? You had like 6, 7 really major coins. And that was it. We get back down into this area here, and you're going to see a tremendous amount of skepticism. You're going to see a tremendous amount of, you know how crypto right now is being accepted globally. And I think at this point, it's going to open up crypto for regulation. And that's something that I really don't want to see happen, because with regulation, right? Think about what's going to happen. Governments are going to say, well, see, we told you so. We need to have oversight of cryptocurrency. And that's going to just, it's going to be detrimental to every project out there. And at that point, I think that's where you're going to see just the rise and then the fall of cryptocurrency. So yeah, exactly. It is the Godfather, right? It is the major index. Think about, everything is weighted against BTC, so for me, do I think it's possible that, we break this low, and then we'll see what happens down here. But I just think in the climate that we're at, if that happens, I think you're going to see, especially because they're already talking about it. They're talking about it in the U.S. government, how there needs to be oversight and regulation into cryptocurrency. And if that happens, just imagine, cryptocurrency is built on decentralization. It's built on that promise that we are going to work amongst each other and not with banks. But if this happens and now you're going to get governments that are going to force your hand, I think that's going to be detrimental, and you're going to just see a massive influx of people that are just going to be selling their positions, and once the first person jumps out the window, right, in cryptocurrency, once you're going to see some of these, higher market cap coins just start taking dives. That's it. That's the air out of the balloon is gone. So that's how I kind of see it. Do I think, I don't have like a magic 8-ball or a crystal ball, man. What do you mean? Do I think it'll go back to what level? To down to this? I hope not. Anything's possible, but I don't trade and I don't invest into things because I think this is what's going to happen. I just react to it, so when price came into my 50%, right, I reacted to it. When price broke this right here, that was the first area of supply and a redistribution, I reacted to it. So what we're seeing right now, we're seeing BTC showing, for me, bullish intent, right? We're seeing a tremendous amount of buyers coming into the market. Well, how do we know that there's buyers coming into the market? Well, just look at look at what's going on in this market, right? If we come and you look, you have your accumulation break, your reaccumulation, another accumulation inside of that reaccumulation. Then you're seeing more accumulation. You're seeing price making a new high. What are we doing? We're walking this up, right? So for me, the key, and I've maintained that, for me to really start getting back and putting more money into crypto, 46,000 is what I need. I need BTC to break above this high right here. If BTC can break above that 46,000 mark, we now have a new leg, right? And that's something I'm going to be looking for. Yeah. So, and then ultimately, yeah, if BTC can do that, then you're going to see all of these other ones right here. You're going to see them all massively green, right? All of these projects here are just going to be tremendously to the upside. And that's something I'm looking forward to. So yeah, I'm not margin trading BTC. I haven't done that in probably like 2 years. For me, crypto is more of an investment opportunity. So whether it's me mining it, operating nodes, investing in nodes, or owning the actual coins, that's what I'm doing with it. Well, yeah, I mean, just think about, your big whales. Think about your, Michael Saylors that are buying millions of dollars of Bitcoin. He doesn't want to see, right. He doesn't want to see his assets depreciate. Obviously he's going to take some profits, and that's what's causing a lot of these movements. But there's a starting point. It's much like the S&P 500. I talked about earlier in the stream where, you've got such a large amount of shareholder buy-in into that. You've got a tremendous amount. Think of everyone that owns Bitcoin. We are shareholders, right? We are owners of that coin. The last thing we want to see is we want to see that coin fail. So you're going to see a very large fight against people, because the only way that market is going to drop below 30,000 is short sellers come in. It's not profit taking, right? Because we know where buyers have come into the market. So profit taking isn't going to cause that drop. It's going to be short sellers. So if they're going to put a short squeeze on, it's going to be ballsy. They're going to have to do it properly. They're going to have to do it in the right timing. And I just don't see the whales that encompass Bitcoin allowing that to happen. So, above 45, 46, I think BTC is going to push the upside easily. Yeah. I mean, that's for me, that's the mark. I think that's going to be the catalyst for us to, and then from there, it's just going to be the milestones, right? Like we're going to have to, once BTC can get above the 46K mark, now we need to start working on taking out some supply, right? We need to start working on, if they can get up here, a pullback, and then they need to get above this, right? They need to trade above that. And I'll tell you right now, if they can get above this like 54 mark, yeah, from at that point, it's golden. We're up, it's going to be up above 72. So that's kind of how I'm looking in and just kind of seeing how BTC is doing. One of the things I look at is, where's your majority of BTC sitting at? And, there's such a large amount of volume sitting on in wallets off exchanges. That tells you that people aren't in any way, shape, or form trying to sell BTC. They're not selling their coins, which isn't creating any selling pressure. So for me, that's something that's pretty important. But yeah, I mean, that's what I'm looking at. I personally, I own a couple coins, so I want to see this appreciate. I took profits. My average buy-in, it was like $3,600. So I'm still in massive profits with it. And then, I've been big on for a very long time is Flux, and if you're looking for something to really kind of dive into, back Flux at 20 cents. And this thing almost got up to $4. So,